Okay, good afternoon, everyone. My name is Willie Hardy, Director of Student Support Services, and we are here today for our financial literacy information session / workshop. And we have Miss Andee Wood from State Employees Credit Union here with us to discuss some items regarding financial literacy and money management and some other things. So, Ms. Andee Wood, welcome. Thank you. And thank you, Ms. Porch, for uh, getting in contact and being a liaison for, having Ms. Wood on. So we just want to thank everyone for being here, all the participants as well. Ms. Wood has asked me to announce too, if you have any questions, please put it in the chat. That's a little more conducive for her. And without further ado, Ms. Wood, you have the floor.
All right, good morning, or well, good afternoon, everyone.
Good afternoon.
Excuse me with this Zoom, guys. This is my first Zoom interaction. I'm looking at my cell phone here, and I can tell I'm a little delayed, so I apologize. Again, for any questions that you may have throughout this session, if one just pops into your mind, just please put all of your questions in the chat. That way I can keep up with whose questions I'm answering, so on and so forth. Making sure that I answer everybody's questions to the best of my ability. Again, my name is Andee Wood. I am with State Employees Credit Union. I have been with the credit union for almost 8 years, and I am a senior loan officer at this time. Started out on the teller line as a teller. So getting in that right job, that right position, you can always make a career out of something, especially if you're looking for somewhere where you can grow. So first off, just kind of wanted to talk about the difference between a credit union and a bank. Most people come in, call us a bank. Unfortunately, we are not a bank. There is a difference. So credit unions are nonprofits. So every bit of money that we make funnels back into the credit union, whether it be from paying its employees or investing in other ventures of the credit union, like new branches or things such as that. Credit unions are owned by their members. So if you are a member of the credit union, you technically are an owner of the credit union. All credit unions operate this way. So you've got Navy Federal Credit Union, you've got Virginia Credit Union. There's a whole bunch of different credit unions around us, distanced from us, etc. Most of the time, to get into a credit union and become a member of any type of credit union, you have to have some kind of affiliation, whether it be from employment or like immediate family. So that's some of the key differences between a credit union and a bank. Now, a bank, they are for profit. So they are either publicly traded on the stock exchange, or they are privately owned. Now, when banks saying they are for profit, what happens is, they earn a profit in the year. Their goal is to make more money every year. The more money they make, the better they look in the stock exchange, so that people buy stock in them. So it's more of a public thing versus like sometimes doing what's best for the institution itself. So that's one thing to keep in mind. Banks are not bad. It's just that you want to make an informed decision when you are trying to open up any kind of accounts, whether they're at a bank or a credit union. Some of the differences between a bank and a credit union: banks typically charge more, like higher fees. They often have lower interest rates in terms of like earnings on deposit accounts. They tend to have higher at sometimes. oftentimes, because of their resources, they can offer more products than, per se, a credit union. Now, our little credit union here, located in North Carolina, has extended a lot, from not only deposit accounts and lending with basic loan products, but we've extended to financial advisory services, real estate services. You know, we have expanded our horizons with subsidiaries so that we can keep growing in today's society as a business. Most banks and credit unions, what they're going to make a bulk of their money off of is fees and interest that is paid on loans. And that's how they're going to mostly get their profits. So if you get a non-sufficient fund fee on your checking account because you didn't have funds in the account to pay for something, they're going to charge you a non-sufficient fund fee. That goes into the credit union's pot. Lending, when you have a loan, you're going to lend for, say, $20,000. That's what you're going to borrow, and that's your principal. But you're also going to have an interest rate tacked onto that loan. And that interest rate is the cost of you borrowing that $20,000 from wherever the financial institution is that you borrow those funds from. So that's how they're making money off of you borrowing those funds from them. You know, sometimes we think about being worried, what if we're going to lose the money that we have in a financial institution? You know, you think about your grandparents, or the older generations that talk about hiding money in mason jars in the middle of their yards, or hiding it under their pillows, or hiding it in their house somewhere, like in a wall. And you even hear them talking about like the Great Depression, and like when the Great Depression happened, they would go to the bank and wouldn't even be able to get their money out because the bank was out of money. So to kind of ease your mind on that, like if you're scared of depositing money into an account anywhere, there's ways around that. So with a bank, you are insured by the Federal Deposit Insurance Corporation, also known as the FDIC. It is a government agency that insures deposits up to $250,000 per depositor, per insured bank, for each account ownership category. So you could have an account at PNC and have $250,000 in individual accounts there and be secured. But you could also go to Truist, which was BB&T, and put $250,000 there and be covered in both areas by the FDIC. Now, when it comes to the credit unions, you are also insured in the same way, just by a different entity, which is the National Credit Union Administration, the NCUA. So if you're worried about your funds on deposit, just understand that if you structure them strategically, if you have over $250,000, if it is structured strategically, you will be insured and guaranteed that money, and you won't lose it like they were worried about 50 plus years ago. Okay. Any questions on that? All right. So if you have a question on that, or you think of something, just go ahead and put that into the chat. And when we get through the next piece, I'll answer those questions. Another thing that Ms. Donna wanted me to kind of reach on was how, like, banks reach out to the communities that they're in. Now, credit union, I can't speak for what banks do because I do not know, and I've never worked in a bank, so I don't have that experience. But at the credit union for SECU, I'm going to kind of pin on some things that we do for the community. And when I say the community, I don't mean just here in Roanoke Rapids. I mean all across North Carolina, because in most places you go, within 20 miles, there is going to be a credit union. Okay. So one of the first things that the credit union does to support our communities within North Carolina is the SECU Foundation. If you are a member with the credit union, you will notice that if you have a checking account, there is a dollar fee that comes out each month. Oftentimes, it's either going to be an SECU maintenance fee or it's automatically going to come out as SECU Foundation. The SECU Foundation is where funds go for us to distribute out to our communities. So some of the things that we do through the SECU Foundation are the scholarship programs. We offer high school scholarship programs for high school students that are entering into four-year universities. We also offer community college and bridge to career scholarships. Now, the community college scholarships, as long as you meet the eligibility requirements, you can apply for that and get help with your tuition for your two-year associate's degree. The bridge to career, I'll be honest, until I was looking into this yesterday, I didn't even know this existed. I knew we helped college students and I knew we helped high school students, but I didn't know we had something else called bridge to career. And I think from what I've understood, this is dealing with a lot of like your certifications and trying to help people, like especially if you're like military and you're trying to transition into like civilian work or things such as that. It's helping you with, or veterans, whatnot, is trying to help you bridge that gap between getting your career on the right path. If you have any questions about those, or okay, I see a question pop in. Thanks, Mr. Willie, about the requirements for the community college scholarship. I can go up and pull them up right now. However, I think you have to be enrolled as a full-time student. I know I remember seeing that. I think that was one of the biggest requirements. But if you go on to ncseccufoundation.org and look at the scholarships, I think there is actually a hyperlink to the criteria of that community college. So again, I'll write that in the group chat, ncseccufoundation.org. That way you guys can go in and look up that, copy and paste to a Word document, whatever you need to do. Another thing that we do through the SECU Foundation is housing programs, healthcare programs, as well as human services programs. So we support a lot of different missions that are in North Carolina to help give back to the communities. And there, if you go to that ncseccufoundation.org website, you can actually see the whole list of where we have given to through that foundation, given back to the community. Another thing we do for contributing to the community is the financial literacy talks. So talking to you guys, coming out to the community college and talking. We also go to high schools and we'll speak, but my most favorite thing to do in high schools is a little scenario called the reality of money. And basically everybody gets these little sheets. They get a scenario, a real life scenario, what their job is, what they do, how much they make in a year or how much they make in a month, how many children they have, are they married or not, And then throughout the whole process, you basically start with their monthly income, and then you go through certain scenarios like housing, vehicles, your month-to-month expenses of groceries, phone bills, and things such as that. And it's fun to watch the kids because they don't know what's coming next. So usually half of them end up broke by the end of it. So that's something we do to like the younger, like the high school students, to try and help them prepare them for like the real world. So then also another thing that we do for the community is we do participate in a lot of the like Chamber of Commerce events. If they need help or if they just need us set up somewhere so that if people have questions. I know we've been able to talk to teachers there because I know during the beginning of the year, oftentimes when new teachers are rolling in for the school year, they'll do something specifically for them, and we'll go to that because most of those individuals are eligible for membership through the credit union at that point because of their employment. Any other questions on the contributing to the community? And like I said, all of that information can, like in general, like housing and health care and things such as that, the scholarships especially for all you students, go to that ncssecufoundation.org. And if you're interested in applying for those, talk with your counselors because your counselors are the ones that should have information on those scholarships. So some common types of accounts that you will see. I tried to pick some that I knew would be here, that would be at a bank, so that you kind of know what to look for when you go in there. Of course, your main one's going to be a checking account. With a checking account, you have a debit card so that you can swipe in stores, you can pay bills online, shop online. You can also write checks off of a checking account. I don't know if any of you would agree with me, but checks are they're not obsolete, but they are kind of fading out. Most people are doing online banking now, or they're paying with their card and not having to wait for a live check to go through their account. But you can write checks off of a checking account. You can draft bills, so have them automatically taken out of checking accounts. And checking accounts also typically earn dividends. So that is interest that is earned. You've got two types of interest. You've got interest that you pay, and then you have interest that is earned. I kind of touched on that earlier. Another type of account that's common is some sort of savings account. At the credit union, we call it a share account, but we use those terms interchangeably. Oftentimes, share accounts will not allow drafts, so you can't automatically take things out of those accounts. You don't have checks for it. It might require a minimum balance. I know here with the credit union, we do require a $25 minimum balance at all times because that is your membership account. And they also earn dividends for interest. Another common account, and it's one of those that I see a difference in between the credit union and a bank, are money market accounts. So money market accounts are almost like a glorified savings account because they're a type of savings account. However, they earn more interest than like a base savings account would earn. Minimum balance than what a regular savings account would. Now, one of the biggest differences that I noticed is that we don't allow drafts from that money market account to pay bills or do anything from. However, with banks, oftentimes banks will actually allow you to write checks off of a money market account and treat it more similar to a checking account. So if you're ever interested in saving money but having access to it, but earning more on it while wanting access to it when you need it. A money market might be a good route for you, but I would ask your financial institution, what are any restrictions? Can you write checks off of it? Can you freely obtain that money? And then one of the other most common types of deposit accounts that help save, which have been a hot commodity here lately because of the rates, is share term certificates. So here we have share term certificates, or shorthanded STCs. At banks, you're going to have certificates of deposits, or CDs. They are one and the same, just different terminology. And basically what those are is a fixed term investment on savings to earn more dividends. So basically you take funds and saving in a savings account and you put them into a 6-month share term certificate or certificate of deposit. When you do that, those funds are locked into that certificate for that 6-month term. If you withdraw early and close it out early, there is a penalty usually with the interest, and you lose interest that you've earned. But that's one way to save money. If you've got money set aside and you're like, hey, I'm not going to use this, I don't anticipate using it, I would love for it to earn a little more money, look into open up a CD so that you can earn some more money on that. Make money with your money. It is important on all deposit accounts to look at dividend rates. The higher the dividend rate, the more money you're going to earn on your money. This is oftentimes, or pretty much it's always going to be displayed as APY, also known as annual percentage yield. So when you look at that rate, understand that that's not the rate that you're going to receive monthly. That is not the rate that you're going to receive weekly or daily. It is annually. So you're going to want to take that annual percentage yield and divide that by 12 so that you get how much you're going to receive every month. So if that annual percentage yield is 5.1%, you're going to move your decimals. So that's 0.051. You're going to divide that by 12 to see what you would earn in interest in a month, basically, or at what rate you would earn interest in a month. Again, all deposit accounts earn dividends or annual percentage yields. However, some are going to earn more than others. So just always kind of pay attention, like, hey, if I've got my checking account and I've got $5,000 in there and I never use that $5,000, I might want to put some of that money into a money market account where I'm going to earn some more money on it than what the checking account can give me right now. Any questions on like those types of accounts, or is there any other accounts that you kind of want me to discuss a little bit, or?
When they go off to college or with their age, can they have certain type of accounts that locks certain things? Like if they open up an account and their parent says, hey, even though they're 18 or 21, they're going off to college, can they lock certain things from the child spending too much money within a month?
Now, I'm not sure if other places would have that ability. The credit union does not. So if you're 18, you are eligible for your own individual accounts if you are eligible for your membership here. Now, if you opened your accounts up prior to turning 18, they're more than likely joint with your family, like one of your mother, your father, and they have access to those funds. Now, that's more of a conversation that would happen between the parent and child of, you know, learning how to discipline with your finances. Like, hey, you have this much money. You need to only spend this much in a week's time or this much in a month's time. We don't really have a lock capability on an account. Does that answer your question?
Yes, it did. And Evan had a question in the chat, asked, do you have any information on private investment accounts?
So I do not have any information. However, if you are a member of the credit union, we do have financial advisory services now. That is something that the credit union offers subsidiaries that I was mentioning earlier. So they can actually talk with you about investments. They have actually been through an investments program and are qualified to enter you into investments. They usually deal with Vanguard, I believe, Vanguard Investments, and they typically recommend that, you know, when you make those investment decisions, that you would plan on at least having those funds in that investment for like 5 years to start seeing like a good return on your investments. So if you are a member with the credit union, I would strongly suggest you give us a call. Say, hey, I would like to make an appointment with one of your investment reps to talk about some potential investments and what's out there for me through you guys. And we can put in that request for you, and they will make an appointment with you to speak with you directly on the investments that we have to offer. Does that answer your question, Evan? Okay. Any other questions about accounts? All right. If you still have questions on any accounts, just let me know. I'm going to move forward a little bit. Got two more things that I kind of want to touch on, and this might raise a few more questions than what I've talked to about in the past. But just kind of trying to give you some tips and tricks here. So the importance of saving. We oftentimes look at our paycheck and say, not happening this month. You know, all of our bills, groceries, especially the price of everything right now. So, however, it is important to try to look into savings. So savings, of course, is setting money aside that's not spent. One biggest rule of thumb to savings is pay yourself first. So instead of waiting and paying all of your bills and groceries and then saying, well, if I have something set aside, if I have something extra at the end, sorry guys, then I'll put that into savings. How often does that happen? Because I know I'm going to go to Walmart and I'm going to see this cute little shirt over here that I've been eyeing for a while, and I'm going to go on and pick it up with that little bit of $20 that I had extra, okay? So, the biggest thing is pay yourself first. So treating your savings like a bill. So when you're writing down your bills every month, make that a bill. Say, I'm going to put $50 every paycheck into my savings account, and I'm not going to touch that money. What's the importance of savings? Why do we need a savings? What if you have an unexpected expense? Sitting on this side of this desk as a lending officer, I can't tell you how many times people come in like, hey, my kid's about to start school and I need some funds to help them get clothes. Or I need 4 tires on my vehicle and I don't have the money to take care of it. Or my taxes are due on my vehicle and I can't pay them. Can you help me out? Can I get a loan for that? My car's broke down and it's going to take $600 to fix it. You know, unexpected things happen. This little bit of cold weather that we've had this winter. pipes could bust in a house. If you own the house, you're responsible for it. So, of course, borrowing money is not a bad thing, but you can avoid borrowing money if you've already saved some up. So one reason why you want to have the savings is for those unexpected expenses. Another thing, what if you're let go from your job? You know, one thing that they like to explain is like it's nice to have at least several months saved up for your bills so that in the event that you lost your job and it took you several months to find a new one, you would have the money in your savings account to cover all of your bills for those 2 or 3 months. So that's another reason why you want to save. Another reason why you want to save is what if you want to go on vacation? We have certain people that come in every year wanting money for vacation. And it's not, those aren't bad things. Don't take those as bad things. Don't think that if you're coming in here to see me and ask for a loan to get tires on your new vehicle or to get money for vacation that I'm going to look down upon you, because I'm not. But what I also want you to see is the other side of that. If I would have saved my own money, I wouldn't have to be paying somebody else to borrow this money. So that's just one way to look at it. Again, I've already mentioned it's important to pay yourself so that you can have money set aside for things that do come up. By saving and setting aside money, it does reduce the amount of credit that you may potentially borrow to take care of these expenses. What are some ways to save? So some ways to save are budgeting, looking at your bills, what you make, what kind of bills you have. Are there any bills that you can cut back on? So for instance, like streaming services, if you have Hulu, Netflix, YouTube TV, and all different kinds of items, are there any that you don't really watch? And I will get to you guys' questions in just a second. But, you know, is there something on that I can cut back on? Or if I have DirecTV and I'm paying $100+ for that a month, but I also have streaming services, which one do I watch more? Could I get rid of something there? So just kind of looking at where you can cut back on. Determining if items are a want or a need. So even down to like grocery shopping. So when you're grocery shopping, is that snack something that you need to get you through to your next paycheck? Or is that more of a want that like, I just want it and I'm gonna go home and eat it when I get home? Or is it something that I can space out to make it through? Also a DVD or a game if you like to play on Xboxes or PlayStations. Something to think about there. So just looking for ways to cut your expenses. Setting aside all loose change. I know I've done this in the past. Like if I have cash, any of that loose change is going in a jar at the end. I don't use my loose change. I just set it aside. So that's another way to save. You know, you've got coin stars all around here. If you're a member of the credit union, we also have like the little coin piggy bank that you can use free of charge. So another way is subscriptions. So I know I was talking about like the streaming services, but oftentimes we have subscriptions, whether that be a gym membership or a magazine that we used to get and look at all the time, or something to that effect. Like they pull from your account automatically each month. So look through your statement and see if there's ways that you can, are there any things that you can stop from drafting from your account that might save you $10? Because if you save $10 on that, save $20 on groceries, and save another $40 on streaming services, look how much money you've already saved by cut out the unnecessary that you don't use. I'm going to look at
Miss Wood, I don't mean to cut you off, but
your guide. Continue to open the.
I don't mean to cut you off, but we couldn't hear the last thing. It sounds like the connection is trying to get a little choppy.
Only score. So I'm sorry.
Yeah,
Is somebody speak?
I was just saying it seemed like it was a little delayed. We couldn't hear the last thing you just said. I think it's the connection.
Yeah. Yeah. Am I back? It just seems really delayed, so I apologize. Students receiving a 2-year associate degree. So if you are on that, I would recommend foundation.org. So like your guide you just type. Okay. And if you have a question on that, Ms. Sharon asks, do you have vacation like that? I have vacation club. The summer account. And you need to more check account and then out of the year. Then we also have, this really isn't like a vacation club account, but it is very beneficial, and I will speak for myself on that one. It's the holiday cash account. So the holiday cash account is all right, I'm starting to get messages here. Okay, can people hear me?
Yes, that's a lot better.
Yeah.
With everybody's cameras off and muting, it'll give her the bandwidth.
Okay. So just to kind of cover, because I could tell I was going in and out by watching myself on the screen. Now, again, for Ms. Sharon, I see where you lost audio. Your question in reference to the scholarships, they are not just for high school. So they do have the high school program that's geared towards 4-year degree scholarships for high school students that are entering into 4-year your four-year colleges. But we also have the community college program that's offering to those who are getting their associate's degrees. So if that is something you're interested in, I did include over here in our chat the website that you would want to go to find more information out about that community college. It'll list the requirements and see if you're eligible. And if you are eligible, speak with your guidance counselor or financial counselor, or if you guys have like a department for scholarships, and they should have information on that program for you to apply for. And if I'm not mistaken, I know someone out at the community college last year, I believe they got one of the community college scholarship programs. And if that doesn't answer your question, Ms. Sharon, if you will just put it back in the message that you didn't hear me, and hopefully I'll try to write it down in chat as simple as possible. And Ms. Laura, if you did not hear anything that I had stated earlier, we do not have vacation club account. You did not hear?
I did not hear it.
Okay, dear, no problem. So hopefully you can hear me now. So we do not have any vacation club accounts. The only accounts that would be similar to that would be our summer cash accounts. Now, our summer cash accounts are only eligible to 10-month employees. So like your individuals that work with the school systems in North Carolina that are on a 10-month payment schedule, they have the ability to open up these summer cash accounts and put funds aside from their paychecks to pay themselves monthly during the 2 months that they're not getting paid. Now, the other account that I could say would be similar to that, but it's not for vacation, but I will speak for myself that it is very beneficial, is the holiday cash account. So basically what that is it is an account that's set up. You can't withdraw from that account. If you do withdraw from that account, you have to close it out in its entirety. And you can have funds automatically put in there each month or however often you get paid, or you can have it to where you put your own money in there as much as you would like. And then what happens is on the last business day of October, those funds are released into whichever account of your choice, whether it be your checking, savings, money market, etc. And then that's your funds that you use for Christmas. I always go over budget. However, that helps me a lot because it's money that I'm not borrowing on credit cards or anything like that to try and cover the Christmas season. So that is a very beneficial account. Did that help you out, Ms. Laura?
Yes, it did.
Yes, it did. Perfect, perfect. Any other questions on that? And Ms. Laura, I know it seems like everybody started going out about the time I was talking about savings. It's important to save. I'll kind of skim over that again real quick. It is important to save for unexpected expenses or unexpected turmoil, say you lose your job, or even it's important to save for an upcoming vacation. So if it's January and you know you've got a vacation in June, start setting aside money each time you get paid for that trip so that you're not having to. One reason of saving like that is that it helps you borrow less. And you're using your own money that you've saved up versus paying interest for borrowing someone else's money. Another thing about savings is if you're like, how can I save? One of the biggest things is when you get paid, treat paying yourself as a bill. But treat paying yourself as a bill. It's say, hey, I need to put $50 aside to save up. for those hard times that come in or for that vacation that you're needing. Ways to save, because in today's economy, it's very hard because living takes your whole paycheck. But ways to save is comparison shopping. So if you got half of your grocery items that are cheaper at Food Line with the MVP card, get those from Food Line. If there's the other half of your groceries are cheaper at Walmart, go get those from Walmart. You know, luckily we live in a town where they're basically side by side and you're not spending too much gas to save some money. Determine if an item is a want or a need. So if it's not something you necessarily need, but however, it's just something that you want, can you cut it out so that you can save? Setting aside all loose change. So for any of you that carry cash, if you use your cash, don't use your change. Just at the end of the day, go put it in a bucket. You can come to the coin machine here at the credit union if you are a member, free of charge, or you can go to the coin stars and Food Line. It will charge a small fee, but you can convert those coins into paper money. Are there any like streaming services or subscriptions that you don't use or that you use less of? Are there any of those that you can cut out? So that's just a few ways, not all inclusive, to try and save. I know that we went out on that, so I wanted to kind of cover that quickly again, just in case you guys missed any of it. If you guys do have any questions on that, all right, Quenisha, hold on and I will reply to you. If you guys have any questions on savings, please feel free to ask any questions that you may have, and I will get to those momentarily. However, thank you, Willie, appreciate that. I'm going to talk a little bit about credit and credit scores. This is one of my favorite topics, so I could talk all day long, but I'm going to be very brief. And if you guys have further questions, please feel free to ask me, okay? So, let's see, credit scores. So, credit scores are numbers that are created by applying mathematical formulas to key pieces of your credit history to calculate your creditworthiness at a moment in time. So a credit report is almost like a snapshot photo. And basically what it does is it takes a picture. When we pull a credit, we basically see a picture of your credit and your credit worthiness and how well you repay others and how well you handle your debt. There are several different credit reporting agencies. 3 of the major credit reporting agencies are Equifax, TransUnion, and Experian. Each credit reporting agency has a different scoring model that they use. The scoring model is what they use to take in those key factors and calculate your scores. So each of these reports are going to use a different scoring model. You can pull an annual one free credit report per credit reporting agency per year off of annualcreditreport.com at no charge to you. And when you pull your credit, that is considered a soft hit, so that is not going to affect your credit score. Most people panic when they talk about looking at their credit score because they're scared they've been working so hard and it's going to pull their credit score down. The only thing that's going to pull a credit score down is a hard hit. So a hard hit is considered when you are putting in an application somewhere to borrow money. Whether it be a real estate loan, a car loan, a credit card, a personal loan, any of those is going to require a hard hit to your credit, not a soft hit. Also, keep in mind that jobs, if you're working, for instance, in a financial institution like the credit union, they're going to pull your credit to view your credit worthiness before you even start somewhere like here. And when they do that, it's considered a soft hit because you're not applying for credit at that point. They're just trying to check your credit worthiness. So understand that there's a difference between hard hits and soft hits. And a hard hit does affect your credit score, but also to give you a little comfort on that, we can tell when credit score is going down because you've been applying for, say, a home loan and whatnot. We can also see on your credit report this you apply for. So doesn't mean better places may have credit, but don't be scared to have your credit pulled if you're trying to get a loan. Now, the key pieces to calculating a credit score. Now, Laura, when you're saying what are the numbers like 10 points, 20 points, 30 points, are you talking about in reference to like how does a hard hit affect the score itself? Is that what you're asking?
Yes, I'm asking about the difference between the numbers for the hard hit or the soft hit.
A soft hit is not going to affect your credit score. A hard hit, it depends on the score model that's used, but I wouldn't say any more than on average 5 to 10 points.
Thank you.
You're very welcome. Most people are paranoid about that because of the scores, and I get that. A lot of places are going to base your credit and interest rate off of credit scores. We will base an interest rate off of a credit score. However, we're not as worried about the credit score as we're worried about what makes up the credit score. Because I can tell you from experience that I have seen credit scores in the 650 to 685 range, which is a mediocre credit. It's not excellent. It's not terrible. But I've seen those score ranges for somebody who's just starting out, has a little bit of credit, limited, but everything they have is positive. But I've also seen that same score with someone who had a whole 2-3 pages of credit history that had several charge-offs, that was recently behind on something, that doesn't have great credit at all. So when you're looking at a score, yes, there are going to be institutions that base a decision off of a score. However, at the credit union, that's not, we look at what makes up the score, not the score itself. And whether you're going through somebody who looks at all factors or just the credit score itself, understand that there's some people that have good positive credit that might have the same score as somebody who doesn't have great credit. Now, the key pieces to calculating credit scores are how many credit accounts you have. So, you know, are you constantly borrowing money? How long have you had those accounts? So, if you just opened up 5 credit accounts, say a car loan, a credit card, a personal loan, a mortgage loan, you know, if you've opened all of that up since January of 2024, it's going to affect your credit score because you've not established any credit history really on that yet. how close are you to your credit limit? So if you have a revolving line of credit, if you have a credit card, if you have an open line of credit, if you have a home equity loan, all of those are considered open lines of credit or revolving lines of credit. And what that means is that you can continue to borrow off of them up to your limit, whether you have a balance on them or not. So that is one thing that is kept in consideration when calculating your credit score, is how much of that credit limit are you using. So for the longest time, for instance, my credit report did not budge in a score amount because my vehicle loan, up until after about a year of me having that vehicle, my credit score didn't really move a lot, just because of the simple fact that my amount borrowed and my amount owed were still too similar. So that is something that's looked at with credit. Credit limits on your open lines of credit. You want to watch how you manage those credits. You do not want to keep those maxed out at all times. When you keep those credit accounts maxed out at all times, that affects your credit score. And from somebody looking at the whole makeup of your credit report and not just your credit score, we're going to look and be like, do you live off of your credit card? That's, that's not a good sign. I understand that things come up, and that's the whole purpose of a credit card, is to help with emergencies. But you don't want to keep it maxed out at all times. The recommended usage on credit cards and like any kind of open revolving lines of credit is roughly 30%. So if you have a $3,000 credit card limit, 10% of that, or if you have $1,000, you don't want to keep it over $100. That's things to kind of look at. If you have a $10,000 credit limit, you don't really want to go over $1,000 with what you owe. You want to keep under that 30%. You want to keep under 30%. I'm probably getting my numbers wrong, guys, and I apologize. But ideally, 30% usage is where you want to stay with that. How often your payments have been late. You do not want to make late payments if you can help it. Most places start reporting at 30 days on credit report, and some start reporting at 15 days. So that is not something you want to do. Things do come up. If you lose a job or you switch jobs and you're working in the hole and you're not going to be able to make your payment, always reach out to those institutions. They might be able to help you without it reporting negatively on your credit. Also, if you're going to be past due on something, don't blame the creditor. The creditor is going to be more likely to help you and assist you if you stay in contact with them. If you're ignoring them, if you're hanging up the phone on them, if you're ignoring their letters, they're not gonna want to help you at all. They're not gonna have any remorse for you when you call them at the last minute before they charge it off. So that's one of my strong advices on that. So again, to kind of wrap that part up, is the key pieces to calculating your score are going to be how many credit accounts you have, how long have you had them, how close you are to your credit limit. Again, 30% usage is ideal, and I know I was messing up those numbers earlier. If you have a $1,000 limit on a credit card, $300 should be all you're using every month, 30% usage. And how often have your payments been late? I would make sure you're paying on time. Ways to improve your credit. Pay your bills on time. Watch the usage of revolving lines. So that's the 30% or less. Create long credit history. If you go in and get a loan today and you go in and pay it off next month, you did yourself no justice because you did not create any credit history off of that. So a lot of people say one of the best things you can do for your credit is go buy a house and keep up with the payments on it, because that's going to be your longest line of credit that you have, more than likely. Only apply for credit that you need. If you don't need it, don't go get it. Your credit report matters as much as your score. So I was kind of hitting on that earlier. You know, we're going to look at what makes a credit, not just your credit score. So you want what is in your credit report to reflect in your score, and you want it to do so positively. Your ideal credit, your credit ranges can be anywhere from 300 to 850. Of course, the lower your credit score, the more riskier you are as a borrower. The higher your credit score, the less risky you are as a borrower. And that can affect your interest rates, so on and so forth. I know it's like right at 301, and this was from 2 to 3. If you guys have any questions, I am glad to answer them to kind of sum this up. If not, I'm set. So any questions you have, I'm open for short discussion. If not, we can go ahead and get off. I'm not sure what those requirements are.
No, I think that was all excellent information. Ms. Wood, are there any questions for Ms. Wood?
No.
No.
Okay. Thank you, Ms. Wood, for being here. Thank you for all the great information you shared. I think you're going to have some visitors to the website, specifically, if nothing else, to check out those scholarships.
Yeah, of course.
Yeah, and I think you mentioned another one about, did you mention something about career?
Yeah, I'll be honest with you, I'm not very familiar with that one. It's called Bridge to Career.
Okay.
But when you click on the scholarships on that website, it's got high school, which is the main one. Right beside it, it's got the college career.
Okay.
And then below it, there's another link for the Bridge to Career thing.
Okay. Yeah, thank you so much. And I'm always an advocate. You know, all the information was good, but I'm always an advocate for the credit information. That's very, very important. Yep.
Yeah, I can talk all day on that. So
Thank you so much. Well, thank you guys for showing up. We appreciate you. It was a great crowd. I almost shut the bandwidth down. Thank you, Ms. Porch, for mitigating that. So, you know, if anything is, our hearts and minds are clear. Thank you guys and have a great afternoon.
thank y'all. Have a great day.
All right.
Thank you, you too.
Thank you.
Thank you.
All right, guys. Have a great one.